Good afternoon. Yes, today is day one of the lockdown in South Africa, and this is actually an amazing time to be in. Scary on the one side, but a lot of opportunity on the other side, and also some time to reflect, spend some time with loved ones, family, kids. If you have them at home still, enjoy the time. Some parents that feel that kids are going to frustrate the living daylights out of them, but I also think that's an opportunity for us to connect with our kids. I'll be, during the course of the next 2 or 3 weeks, share some ideas on how to help your kids with their finances and how to help them become financially responsible citizens in the world economy we're in, and mentoring them, managing them, equipping them, and helping them. But for now, 2 things I quickly want to talk about that I get as questions quite often during the last 2 to 3, 4 days. The first one is, can I claim on my income protector if I have the coronavirus? Yes, you can. Most insurance companies, if not all, cover the illness. However, make sure that you have been diagnosed with the coronavirus, first of all. Second of all, that your waiting period on your income protector complies to what it is on the virus. For instance, if you have a 30-day waiting period on your policy, because of the fact that you might be a salary earner or something like that, then if you are not sick for longer than 30 days, it's not going to pay out. If you have a 7-day waiting period, yes, it will pay out if you've been diagnosed and say that you have to be in isolation or you can't work, etc., etc. So that's question one. When it comes to having a loss of income due to the economy, due to government locking down, no, you don't have that on your life insurance. However, you might have a loss of income on your short-term insurance policies, the likes of the Santams, the Mutual and Federals, the Discovery insurers, etc., etc. But that is more on a business level that it's applicable. If you have a business where you might have loss of income, yes, you might have that. But talk to your short-term insurance specialist, and if you need some help on that, I can maybe try and direct you in the right direction. The second question is, Stian, should I worry about my pension fund or my investments? So if you are a investor that are currently in retirement, we have a strategy in our practice where we say some assets are high aggressive assets, others are more medium, and then others are low, and we draw an income on those low assets on retirement. When the markets are up, we take some of the cream from your high equity portfolios and dump it. Now, those equity portfolios would have definitely had a knock over the last 4 to 5 weeks. So yes, you have a knock, but do not worry, because the markets always recover. If you look at what happened in 2008, 2009, if I had to tell you, listen, Mr. Client, invest in a Allen Gray equity fund. This fund, over the last 4 to 5 weeks, or let's say 6 months, had a negative growth of 32% over a 6-month period. That means annually, it's a 62% negative return. You would have said to me, Stian, you are really, really smoking something. But if I told you that same fund, from the day it was on its lowest point till a year and a half, 2 years later, that fund did 53.21%, you would have said, Stian, you had a crystal ball. No, I don't. But we also know that history repeats itself over and over and over again. We saw the same thing happen 2001, 2002 when 9/11 struck. We saw it in 2008, 2009, and it goes on and on and on and on. So do not worry about it. However, if you say, I want to capitalize on this current low market we're in, my suggestion is talk to us, and I've spoken to some of you already about it, is to say that we move a portion of your conservative funds to an aggressive portfolio with a high equity fund, because we know the markets are going to turn. Now you might say, no, Stian, I'm not going to do it. So here is the other way of looking at it. If you bought a property, if you were in the market for a property, you saw a really nice property, right market, right location, and you want to buy the property, and you think, oh, I'm going to wait a few weeks, and then 3-4 weeks later, the agent phoned you and said, this property that you wanted to buy for 2 million rand is now between 1.2 and 1.3 million rand. The question is, would you buy it? Most definitely yes. Even just to keep it and sell it after 2 years, you would still make back your money. So the markets are currently there now. There are major good opportunities in the market. And I do not make those decisions alone. I have a team around me that says which one of those portfolios that were invested will in the long run bounce back, because it's very, very, very important to make sure that if you invest in a property or in a portfolio where the market is currently down, you must be able to say that portfolio are good underlying investment assets you're invested into, and they will ride the market when the market climbs again. So if you want more advice on that, you can phone me, you can SMS me, you can WhatsApp me, or as most of you have seen on our emails and some WhatsApps that went out, that you can book a direct consultation into my diary through Zoom, and you can do it on www.stiandewitt.co.za and just click on the link that says request an online meeting, and you can choose either a 60-minute or a 30-minute meeting with me, and I will gladly help you and run through all the scenarios and help you to get through this maze, so that we know that you are financially sound, you sleep peacefully at night, and you don't wake up, like Robert Kiyosaki says, like a baby sleeping, waking up every 2 hours crying. So I hope you have a great day, and shout if you have any questions.